Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this technical analysis of the stock market video, we're going to take a look at the Dow Industrials on a daily and weekly view, take a look at one of my key indicators, and then check in on the high yield bond fund, the emerging market ETF, Nasdaq Biotech ETF, and the Technology ETF XLK. So stay tuned. All right, let's start off here with the Dow Industrials. The Dow really hasn't done much the last 2 days. It was down almost 20 points on Friday, and really when you look at it from the close on Wednesday, which was the Federal Reserve announcement, 950, we're down about 36 points over the last 2 days. Now, the reason I've got a question mark up here is because I'm not really sure that minute wave 5 of minor wave 3, I'm not sure that that's completed yet. Okay, so there's a decent chance that this is going to continue to push to the upside. It's riding above the 10. The move on Wednesday was fairly strong with the breadth up to down issues was about 6-1, both in breadth and in volume. So fairly strong in here, and it kind of makes me think, well, maybe we're going to do one more push up, and then that's when this alternate count would be in play. So we're watching that pretty closely. Take a look at the weekly chart. Same picture. That's why I put the question mark here. You can see the consolidation going on over the last 2 weeks. And for the week, the Dow was actually up 11.6 points. It doesn't really look like it, but you know that's the number I've got. And so can this continue to push higher? Yes. And the wave projections that I've got indicate that it should push higher before it's completed. And then of course, once we complete 3, we've got to do 4 and then a 5th wave. That's the best count that we've got right now. All right, so that's the picture on the weekly chart. And when we look at one of my indicators, the McClellan oscillator, I say one of my indicators, it's not, I didn't create this. It's one of the indicators that I use on a daily basis that I share with my insider members every day. And you can see we were extremely or severely oversold is what we call it down here. And the peak of that was at March 9th. And then we've come back very strongly. But where are we now? We're right dead neutral. Okay, the market is literally neutral. It's not overbought. It is not oversold. And the interesting thing about when you move from an oversold environment, this thing has a tendency, not every time, but it has done it several times in the past, to move to the other end of the spectrum very quickly, to go from oversold, severely oversold, to severely overbought very quickly. You can see the moves that have literally gone coast to coast, okay? So that's what I'm watching in here, and that's the other input in here that makes me think, well, maybe we're in the middle of going coast to coast, which would mean we would have continue to have push to the upside. All right, let's take a look at the high yield bond fund. Now, the high yield bond fund is another thing I always watch to give me some clues as to what the market's doing, because in my mind, I look at the high yield bond fund as an indication of animal spirits, right? Risk on or risk off. When this is going up and people are pursuing high yield bond funds or high yields, they have a tendency to be riskier assets, so therefore the theme is risk on. Well, right now you can see how it's bounced back fairly strongly. It got very extended to the downside, very similar to what happened over here in October, and it bounced back up, but it couldn't hold after 2 days. And it did hold, so now we've been above the 10-day moving average. I say couldn't hold, I mean hold above the 10-day moving average. Now it's held for 3 days in a row. Now, the other aspect that makes this scenario a little more bullish than this one is that the 21 was breaking below the 55 here. Okay, so a fairly negative situation. This hasn't happened yet. Okay, the 21 is still above the 55. The 55 is totally flat. And now we've got this thing for 3 days in a row above the 10-day moving average. Makes me think that this is a stronger situation than what we had back here, and it's just one more piece of the puzzle that we're looking at. All right, let's take a look at the Emerging Markets ETF, EEM. Okay, this is the weekly chart of EEM. You can see it had a big move this week, up $1.48, closing at $39.49. So the key thing in here is the trend is still solidly to the upside. Everybody's talking about, I saw a lot of people talking about, oh, emerging markets are breaking out. They're breaking out. Well, yeah, it's come to a new, high above the week ending February 24th, and it's at 52-week highs in here. Yeah, that's true, but I just don't see, major breakout, because I see that what it's going to run into is a whole lot of overhead. And let me zoom back out so you can see what's going on. Okay, look at all this activity, all this trading that was going on for about 3 years. Back and forth, back and forth, back and forth. So what did I do is I eyeballed right about the middle of that, and we're right at 41. So I think fairly quickly this is going to start running into a fair amount of resistance in here. Now, it did it back in here as it came into the lower end. Now it's a fairly strong move, but it consolidated, sold off, made another run for it, got above this a little bit, but now we're still going to be running into resistance as we get above into this area. You can see that I put a dotted lines in here for where what was support became a resistance type range up here, and I think a similar type thing may happen with the middle of the trading range in here. So that's why I'm looking at 41. It's just something to be aware of. This right now is trending very nicely to the upside, but just be aware there's a lot of overhead supply. Okay, that is the emerging markets. Now I want to take a look at IBB. Okay, taking a look at the Nasdaq Biotech, IBB. It's had a nice breakout from this symmetrical triangle in here. The challenge is it's had difficulty holding above 300. I put out a tweet on this that I thought it might be a potential bull trap back here in the beginning of March, first week of March, and it's been struggling to stay above that. When I look at my indicators, this was not being confirmed, this move. The initial move to 300 was not being confirmed by all three of my indicators that I look at. And then we got this sell-off that happened on Thursday and Friday of this week too. So this could be just a little bit of consolidation. It could be pulling back a little bit more, ready to make another run. From a bullish perspective, this move to me out of this symmetrical triangle hasn't been completed yet. If, just from a standard pattern look at it, what I'm trying to do is create a parallel line. What I typically do is look at something like this and project out. And let's just make that a dotted line, and then I will project it to the right. And that's the projected move up to that dotted line. Somewhere along that dotted line is what I would be expecting, okay? So if we pull back a little bit more and then make another run at it and stay above 300, we could be going for that type of projection. So that's something to keep your eye on as we go forward. Let's take a look at XLK. Wow, XLK, this thing has just been going. This is what reminds me of SMH, the semiconductors. Look how it's pushing now. But these last 5 weeks, this is a weekly chart. Last 5 weeks, we're outside the Keltner channels. We're getting at an extreme. We are pushing quite a bit in here. The one thing I want to make a note of is the RSI. Now, I use the 10-day RSI, or 10-bar RSI, because I just like it better. But that's what I use. Now, we are at an extreme here. This level, 82.47, I think that's the exact reading. Let me check. Yeah, 82.47 or so and small change. I put a line in there and just say, okay, there's really only been 2 other times where we got close to this one. Got close. So where was that? You were right in here, and basically you went up, you pulled back a little bit for a couple weeks, then went a little bit higher, then rolled over and had a little more of a correction, okay? And that was back in the summer of 2014 when we got to an extreme. And then the only other time we got up to that rarefied air was right here, and that was December of 1999. And we had one more week, I think it was, right here. We had one more little week move up, and then we went through about a 4-week correction. And then then we had the final push up that showed divergence on the indicator, and that was into the March peak of the Nasdaq. Okay, so right now, you know, we're up there, we're pretty high, ripe for a correction type of activity. Is it going to happen next week or the week after? Just keep your eye. You're getting extended. We're outside the calendar channel. Something to be aware of again. All right, that's it for this weekend. If you felt like the video was helpful, please hit the like button. And remember to share the video with friends and family on social media. You can think of at least one person to share the video with. And if you're not watching this on my website, head on over to the website. Check out the posts I've got for you over there. And while you're there, check out the Insider membership and the technical analysis course I've got available. All right, everyone, have a great weekend. We'll talk to you on the next video.